Buongiorno, benvenuti.
Good morning, ladies and gentlemen, and welcome to this meeting with Professor Tony Veronese, whom, as you know, shall talk about cities in developing countries, inefficient and unlivable, ? So we shall try and give an answer to this question. Listen to his presentation. Professor Venables studied in Cambridge and Oxford. He now has a chair in Oxford, and he's also the director of an important centre of economics. He taught at another important university, the London School of Economics, and was also advisor to the UK Treasury, and he was also the chief economist at the UK Department for International Development. He studied the economies of developing countries as well, but his main focus is on the relationship between economy and geography. Perhaps his best-known book is something that he has written together with the Fujita and Krugman. The spatial economy is the title of his book, i.e. again the relationship between space and economy. We're very pleased to have him at this edition of the Festival of Trento, because obviously his contribution is key, given the fact that this edition, as you know, is devoted to the places, the areas of development. Nowadays, the world economy is growing, and cities play a pivotal role. Think about the Chinese model. You know for sure that this driving economy, the Chinese economy indeed, to develop, creates metropolis. And as a matter of fact, over the past few years, we saw huge cities developed that can be actually named as metropolis and plants, because there's a certain district that would develop, developing again plants, and the residential buildings to where the workers could live. So this is a city-based economy with all the problems ensuing from that. You know, very rapid growth of these huge cities brought about a whole set of problems. So cities that were already there became twice as big. Shanghai, for example, has seen the doubling of his inhabitants, including at the moment up to 12 million people. The Architecture Biennale just opened in Venice, and one of the main subjects of this edition of the Biennale is the growth of cities, the ongoing urbanisation of world population. 10 planners indeed warn us that between now and 2050, the majority of world population is going to live in cities. So the process that in Italy we saw at the 1950 is now to be experienced in 2050 in the rest of the world. So we're going to have cities playing the key role. Now, before giving the floor to Professor Venables, I'd like to refer about an anecdote. In the 80s in Mozambique, that was the time of the Cold War, and Mozambique was divided by fierce civil war, and the Mozambique government triggered internal mobilization where the Maputo citizens were shifted in very remote areas, rural areas, and that was named operação, produção, operation, production, and that costed quite a number of lives. So the areas for production were identified again in the rural areas. So people were shifted from cities to rural areas so as to try and bring about development in such rural areas. Then, after a few years, the Cold War was over and Mozambique shifted again to the market economy, and the area for production became cities again, and Maputo is one of the great metropolis in Africa with all the problems that are connected with being a big city, inequalities and other problems, and not as big as Lagos in Nigeria and Nairobi in Kenya. Anyway, what was done at the time has been totally undone, basically, and it is with great pleasure now that I'd like to give the floor to Professor Venables.
Good. Great. Thank you for that introduction, even if I didn't catch too much of it. And let me obviously start by just saying it's a great pleasure to be here. And let me thank and congratulate the organisers and hosts of this event. As I'm sure you've heard people say before, the idea of an economics festival that gets people off the street is slightly alien to those of us from other countries or the Anglo-Saxon world, perhaps, whatever. Whether that means economists are taken more seriously in Italy, perhaps held in greater esteem, that would be nice to think. More importantly, perhaps ideas. There's more public appetite for ideas and putting up with lectures by people like me in Italy, which would be fantastic if there is that respect for ideas. Anyway, with those words of thanks and introduction, what I want to talk about today is cities in developing countries. It's an area I've been interested in a long time, and now we've got quite a large project of work going in Oxford, LSE, in collaboration with the World Bank and funded by the British Aid Department. Vernon Henderson, who's speaking this afternoon, is involved with that work, so he'll be talking about a fairly specific piece of work that we're doing. I'm going to give a much broader overview of the way I see the issues and some of the emerging messages and lessons we're getting out of the project. Okay, more introduction. The challenge you probably all know, but it's worth putting the numbers down. There'll be more than 2.5 billion new urban dwellers by 2050. That's a lot of people. It means getting on for 1.5 million people per week will be the rate of increase of city populations. And of course, most of that's going to be in the developing world. So the numbers I've got here, India, 200,000 people a week going to cities, Africa, 350,000 per week. So basically, 500 million more Africans are going to have to be accommodated in cities by 2040, 2050. Or putting the same fact differently, Africa is going to have to build twice as much urban structure over the next 30 years as it has in the whole of previous history. Okay? So the challenge is enormous. When I think of the real policy issues, the really important world issues we need to get hold of, I suppose climate change is number one, and urbanisation, addressing these numbers and accommodating these people is actually number two. So the challenge is evident. The key points that I want to get over today, I think, can really be summarised in the two bullets that I have there. First is that cities do have huge potential for driving economic growth and for transforming people's lives. They can be highly productive, and places where we like to live. They offer decent living standards, and for all the congestion, whatever, people like to live in cities. So key point one is that very, very positive message about cities. I'm not quite sure that got out into the title that ended up on the programme, if people remember that. But anyway, key point one, yeah, cities have this great potential. But second point, many developing countries, particularly Africa, and my focus is going to be Africa, really are failing to achieve either livability or productivity. So what I want to do in this talk, just to briefly outline what I'll be doing. First, it's going to be a little bit of sort of urban economics 101. I want to just outline the potential of cities, you know, how bits of the city hang together, why it is that economists think that cities are so valuable and so productive. So first I want to outline, you know, the potential of cities. And that's going to be talking more about the developed world and a bit of economic theory than it is about the developing world. But then, of course, with that framework hopefully in everyone's heads, I'll go and talk about what's going wrong, I think, in Africa, and suggesting that there really is a bit of a low-level trap that Africa's got stuck in, a real problem that has to be broken out of. And then I'll rather briefly at the end discuss policy implications, although those policy implications should have dropped out of much of what I've been saying earlier. Before getting into that, two quick background facts about Africa. Two background facts about Africa. Well, first, a general world fact. Yeah, obviously, there's a correlation, strong positive correlation between income, per capita income, and urbanisation. So the horizontal axis there is GDP per capita, the vertical is the urban share of the population, and yeah, there's a relationship. Whoever constructed this diagram really shouldn't have put a straight line, since one of the numbers is capped at 100%. It's not going to go over 100%. But anyway, that strong positive relationship. But of course, the little squiggles you can't really see. Yellow is, neither can I, Côte d'Ivoire, pale blue is Nigeria, orange is Tanzania. So they're African countries which are urbanizing uncorrelated, without the income growth. They're just heading basically straight up that diagram, whereas historically, you know, the income growth and urbanization have gone together. So that flags something about things being different, potentially wrong in Africa. The second introductory fact is that Africa is urbanizing early in terms of per capita income. So the chart here gives per capita income average for a region at the date, whatever that is, where the region gets about 40% urbanized. Maybe not the whole region, maybe some countries selected out. Okay, and orange is SSA, Sub-Saharan Africa. Okay, so Africa is reaching that urban level at an income level basically half of the other regions, Latin America, Caribbean, Middle East, and much less, just less than a third of East Asia Pacific. Okay, so Africa is urbanizing early, right? So this is going to flag up issues that we'll get to later. Okay, that was a couple of introductory facts. Now let me go to try and persuade you of the potential of cities. And for that, we need a bit of an analytical framework in everyone's heads that I'm going to then run through. Now, you know, most economists hate diagrams with arrows whizzing around everywhere, and you know, it looks a bit more business school than economics. Anyway, the way I want to structure the talk is think of cities as having three components, three capital stocks, if you like. One is the residential capital stock, you know, houses, right? Second is the productive, the business sector, that capital stock, okay, which obviously generates jobs, whatever. And the third is infrastructure, right? So those three capitals, the white things on the side, residential, business, and infrastructure. They're the three building blocks. But of course, key in a city is the fact that it's a system. All the bits are very closely related. That's why we've got the arrows whizzing around, okay? So let me talk through what this is trying to say. If you start at top right, then, you know, well-functioning cities, what are they doing? Well, they've got a residential capital stock that delivers decent housing. They've got infrastructure that enables you to get in and out of work and things, okay? They're delivering high density, as I'll talk about in more detail later on. The housing and the infrastructure together are delivering connectivity. You know, people can get to work, firms can communicate with other firms. And of course, if you've got connectivity, if you've got infrastructure, that will tend to make the city efficient. It'll reduce the cost of doing business coming around the circle there. Okay? It'll reduce the cost of doing business in the city. So that will in turn attract the investment, the business investment. It'll generate the employment in various sectors of the economy. And then, as I will talk about in a bit more detail at the moment, that should generate productivity. It will create jobs and raise productivity. I'll get into detail there. But of course, if you've created jobs and raised productivity, then what have you done? You've created private income that will support the residential construction. Okay, we're going around the circle. You've created a tax base that will create, you know, the fiscal revenue that will pay for the infrastructure, going around the circle. And very importantly, you've created expectations that the city's thriving and flourishing. And all these capital stock decisions are long-lived, so they're going to be based on expectations about the future. So you'd have created expectations that will keep these going. So this is the well-functioning city, right? I'm going to sort of reverse the arrows later on, but I want you to have that in mind. Okay, let me elaborate on that a little bit, right? Those three capital stocks. I want to talk a bit about production, then residential, then infrastructure, in that order, I think. And first for the well-functioning city, right? Then we'll switch to some of the African issues. Okay, well, let me go through this fairly fast, I hope. What do we know about the organisation of jobs, the productive sector in these well-functioning cities? Okay, it tends to cluster in a central business district. Not all of it, you know, manufacturers going to be on the edge, sub-centres will be around, but there tends to be a central cluster. Why is that? Okay, the fundamental driving mechanism here is agglomeration. So productivity is high when there's intense economic interaction. Okay, lots of people close together makes for high productivity. Big literature on that, you know, just very quickly. Scale and specialization. Right? You've got a lot of activity. You can be specialized, you can be really, really good at a very, very narrow task. And there's enough demand for it that it actually pays. So you've got specialization and scale. There's the incentive to train in becoming an expert in a tiny bit of engineering or finance or whatever, which you couldn't do in a village, right? There'd be no market for it. Scale and specialization, forward and backward linkages, lots of competition, so no little pockets of monopoly or monopsony. That's all competed away. And just knowledge to learners. People learn from other people. Okay, so production sector, yeah. Key element is this agglomeration, productivity coming out of density. I should say that little bit at the bottom there, the evidence for that basically comes from developed countries. Very little for developing. I think for two reasons. One, lack of data. Well, three reasons. One, lack of data. Two, researchers haven't been that interested, until recently at least. And I forgot what the third is. Oh, the third is maybe developing countries just don't yet have the sectors where these agglomeration forces are really, really most powerful. I'll come back to that. Okay, so that's theory. This is a sort of pretty chart that I like to put up. You know, that theory seems to be borne out. London, New York, Hong Kong, employment density, you're getting about 150,000 people per square kilometre working, okay? So there must be something correct on the previous slide. You know, why would you pay central London rents commuting to get 150,000 people into every square kilometre of the square mile of the City of London, right? So, you know, the theory does seem to be borne out by those sorts of things. Okay, so the well-functioning city, right? Productive capital, residential capital. The way to think about this is, if you're going to get density, pack people in, then you've got to have efficient use of land. I mean, land really becomes the scarce factor. Everything can move around, firms, workers, houses, except land, right? So you've got to use your land efficiently. That means two things. One, land can be developed, right? There aren't legal, institutional obstacles to developing land, of which more later. And second, land's occupied by the people who value it most, the unusual sort of things that can be achieved by a market. So when you think about those forces in a city, you probably get a monocentric structure, right? Achieved by the market system, with rents being high in the centre, therefore incentive to build tall, to economise on land, those incentives to economise on land high in the centre, that structure. And again, it seems to be borne out, that a priori theoretical reasoning seems to be borne out by the evidence. It's pretty monocentric. Same three cities, but now residential density. So not number of workers per square mile, but number of inhabitants per square mile. It's not as steep. So you've got the jobs concentrated like that, the residences concentrated like that. Obviously very specific on the particular geography. Hong Kong doesn't have much flat land. On the transport technology when the city was built, so conditional on lots of things, but they're all that sort of shape, okay? That sort of monocentricity. This is the same thing for many cities around the world, all very deliberately to the same scale. So, bottom left there is Atlanta, which does, have that sort of downward sloping gradient, but it's not very dense anywhere. Top middle is Shanghai, okay, where you really have that. So what I'm saying is, we expect residential pattern to follow that sort of structure because that economizes on land, it's efficient. Not all cities are like that. Okay, these are three cities that clearly aren't. So it's distance from the centre on the horizontal, population density on the vertical, right? And you can guess why those three cities, ended up looking different. I won't bother to spell it out. It's evident from their histories. Okay, third element. What do we want from infrastructure? How do we want it to work? Well, a couple of pretty obvious remarks here. A well-functioning city is going to have decent infrastructure. Very obvious remark. Obviously, infrastructure is partly public goods, transport, sewerage, that sort of stuff. Partly public services, waste collection, education. Partly utilities that can be privately provided, subject to regulation, water, power, can be privately supplied. Think of infrastructure, and I'll come back to this point as well, think of infrastructure as providing sort of three different sorts of things. One is direct benefit. Second is encouraging private investment. There's obviously a complementarity between being on the power supply and building somewhere. And third, an extension of that, coordinating private investment. Okay? So the question of where do I build something? A city's growing, you've got all these different people maybe planning to build. Where do they do it? Committing to where the subway station is helps to coordinate, and I'll come back to that point as well. Final thing on urban potential, the well-functioning city. Public finance. Infrastructure is expensive. Surprise, surprise. How do you pay for it? Basic economic principles here. Land is in inelastic supply, so as demand goes up, you can't, the supply goes vertical, so the price of land gets bid up. Okay? So in a simple economic model, all the benefit of the city accrues to whoever it was who happened to own the land that the city is built on. That you should tax, right? Clearly, if I own some land in central London and it's appreciating, it's not because of what I've done, it's because of how the city's been built and what everyone else is doing. So ethically you should do it, economically you should do it, it's non-distortionary, it's on something in fixed supply, it's fairly easy to administer. So the well-functioning city can have the land tax that finances the infrastructure and it all hangs together. Okay, one last thing before I turn to Africa at speed. It's just a map I quite like. Okay, so I've talked about density, infrastructure, connectivity, making bits hang together. This is London. You probably can't read any of that, so let me show what it is. It's the number of people living in one. Okay, that's right. It's the number of jobs available by public transport within 45 minutes travel time of each place. So if you're in the dark red area, if you live there in London, you can access over 2.5 million jobs within 45 minutes by public transport. Okay? If you're in the area stretching out to the sort of pinks, you can access over 1 million jobs by public transport in 45 minutes. So these messages I'm trying to get over here: density, connectivity, infrastructure. You can see what they can deliver, being able to access that many jobs, and the other way around, the employers being able to access a great many workers. Yeah. Okay. That's the introduction. It's okay, don't panic, I'll get through it. That's the urban potential. Now let's turn to African cities and think, again, using the same three headings, albeit in different order, the same three headings. Are they delivering? If not, why not? So I'll run through some facts, a little bit of diagnosis, try and put it together, and eventually some policy. Well, on the residential side, you know the story, but again, the facts really speak very, very loudly. So that figure there, countries on the horizontal, and the proportion of the urban population living in slums on the vertical. So in South Sudan, it's sort of 95%. Well, that's not surprising, actually. South Sudan didn't have a city. I mean, South Sudan became independent about 8 or 10 years ago, and it didn't have a city. It's now got, Juba, one city that's basically just a sort of shanty town that's grown, from nothing. So for South Sudan, 100% is 95% is not surprising. The fuzzy sort of cross-hatched line in the middle is the sub-Saharan African average. So about 70% of the urban population living in slums. Okay, so so Africa is evidently accommodating people in slums. That is to say, basically single-story shacks rather than in formal, constructed buildings. Okay, so what's the challenge there? Clearly, you want Africa for livability as well as density and all the rest of it to be able to provide better quality housing. There are two questions there. One, is it technically feasible? Right? Africa's urbanizing at low income levels. Maybe if you're that poor, you simply, the technology to build a decent house that's affordable simply isn't there. I don't think that's true, but that's one hypothesis you could put forward. And the other hypothesis is that something's going wrong institutionally, economically, that is preventing people from building decent houses. Let me address both of those. The first, I thought it would be time for a picture break at this stage, although you're probably not sure you can see those pictures very well. Is it technically feasible to provide decent quality housing at low income levels? Well, I just put some historical examples there. So, you know, that's the thing on the top left, plans for London terraced houses in the 1870s. And they were pretty blunt in their speaking there. These are plans for fourth-rate houses, right? That's the way they were described. So really very small, very packed in, but decent houses, you know, brick walls, slate roofs, and basic services, you know, sewerage on the mains sewerage system. New York did it rather differently. Tenement blocks, that's top right. So they're, you know, 5, 6, 7-story tenements. So it's a view down on washing day, I think, with all the washing hanging out. Obviously, Indian cities, a lot of Asian cities are doing the 4, 5-story route. So Mumbai on the left there, right? 4 or 5 stories is good because you're cramming in a lot of people, but you don't have to pay for an elevator. People can walk up. Okay. Hong Kong, back in time, you know, when it was still rather poor, did it by public housing at very high density. There's a picture of slums in Kampala, but you all know what slums look like. There should be a picture of what Addis Ababa is doing at the moment, which is actually building affordable 5-story tenement blocks, fully serviced, that are sold off with a little bit of government subsidy, but not too much. Addis Ababa is succeeding in doing it. So my point here is it is technically feasible. But most other African cities, well, they're stuck between, you know, slums, formal, high-quality housing for a very small elite, and unfortunately, policy initiatives building things like this, right? That's South Africa, that's Dar es Salaam, okay? It's a very, very low density. If you know, think back to that London map, right? If you want to get, you know, cram people together, building this way is problematic. So these are big, you know, public housing initiatives in those countries that aren't working. Anyway, so I think it is technically affordable. You know, the Addis example. So why isn't it happening? Well, I think there are a number of, you know, legal, institutional, political obstacles to building, you know, decent houses in Africa. And I want to spend a couple of minutes on them. Let me just preview them now. One is property rights are messed up, and I'll come back to that in more detail. Second, regulation building regulations are pretty inappropriate. Third, the financial sector isn't, you know, doing the mortgages, and then some other things on infrastructure I'll come back to. Property rights are a real issue in African cities. Yeah, I've said that you need to get, you know, people building proper quality structures, building dense, building tall. And obviously for that you have to have clarity that when you build it, you will still own it. It won't be taken away from you. It won't be subject to a legal dispute for years and years that you don't actually have rights to the land. Okay? Africa, there's a real mess as traditional land rights have persisted in some places, changed and been modernized in other places, but the phrase we use is privatized but not clarified. So yeah, traditional rights are now replaced by private claims, but often there are multiple claims on the same piece of land. These claims get tied up in the courts for years and years and years. That means it's difficult to consolidate. The development gains on the land are very often captured by the elite. You know, it's politicians who manage to stake a claim on the land or get the planning permission to develop it. All those problems. So that obviously reduces the incentive to build if you don't know that you've got secure title to the land. But it also has all sorts of other ramifications. I mean, suppose you have built, you know, you might want to use your property as collateral to take a loan to start a business. Well, you can't get collateral unless you can persuade the owner that the lender that you've really got secure title. We see this very acutely in Uganda, in Kampala. So the map, the centre of Kampala is sort of in the sort of reddest area somewhere there, and it's a map of different land tenure systems in Kampala. So some are freehold, modern freehold. Others are modern leasehold, fairly short term on the whole, 49 years, but probably enough to build. Some are customary, where residents have managed to get some sort of rights, but they're often subject to dispute and unclear. Certainly can't use the land as collateral. And others are this particularly peculiarly Ugandan thing called Milo. That's the sort of bottom of the box there. Milo is where one party, typically the old Ugandan royal family, owns and has absolute rights over the land, and another party owns and has absolute rights over the building on the land. If you think about it, that's tricky, right? I mean, it's okay if the building is a shack and you can dismantle it and move it, but if it's anything more than that, clearly having that complete conflict of interests is hopeless. So property rights are an issue why residential development has been problematic. Building regulations have also been problematic. Building regulations are clearly necessary for lots of reasons to mitigate externalities, to make sure that proper foundations and things in buildings. But many African countries basically inherited building standards from the colonial period. So they've got ridiculously large plot sizes, for example, or very high building standards. And obviously what that means is they're just ignored, right? So there's a whole set of building regulations that are ignored. Therefore, most of what gets built in Dar es Salaam, I think it's about 90% of what gets built is illegal. It doesn't meet any of these completely inappropriate building standards. So it's illegal, doesn't have legal protection, you're back in with a mess with property rights and all those problems. Building costs in Africa are surprisingly high as well. For a variety of reasons. In some countries, one man has had a monopoly over cement. He's the richest man in Africa by a long way, Mr. Dangote, worth about 11 billion, I think. Lots of issues on the building cost side. Third reason why the residential side hasn't worked well is simply access to capital. Right? Commercial banks aren't very good at issuing mortgages, doing mortgage lending, and that's particularly the case in an environment that's probably quite inflationary, where land rights are insecure. So typically, if you could get a mortgage, it would be very short-term, very high interest rate. It doesn't work. You're not getting access to capital. Okay, that was a quick run through. So the residential side screwed up for a lot of reasons, partly to do with institutions, legal rights, and so on. Infrastructure, again, let me try and be brief. Obviously, infrastructure provision is weak, better in urban areas than in rural areas, but weak. And people who come up with estimates of the magnitude of the infrastructure gap come up with these scarily large numbers. 15, 20% of GDP even needed every year to build the infrastructure. So these are massive amounts indicative of the scale of the gap. The consequences of bad infrastructure I've already alluded to. Let me say them again. There's obviously the direct welfare loss of sitting in the traffic jam or whatever, right? Direct loss there. But it's more than that. You've destroyed connectivity in the city. So I'm back to density connectivity and all that. If people can't, firms can't communicate with other firms, if it takes 2.5 hours to commute to work, clearly you've got problems there. And third, this point about infrastructure coordinating investment. The way I usually talk about this is by a simple example. Suppose that the cities are really growing, and everyone knows that there's going to be a sort of a little secondary centre on the edge of the city. Right? It has to be. The city's growing, there'll be a sort of shopping mall, secondary centre. Right? But you're a private investor. You don't know where it's going to be. It could be there, or there, right? If you don't know, you're not going to invest, right? Because you want to know that other people will invest and the whole thing's going to take off. So it's coordination failure. What do you do about that? Well, you could issue the city plan that will say it's going to be there, but there are a lot of African city plans and they're not very credible, okay? Or you can do the infrastructure, which is a credible commitment that, yeah, there is a road or a bus transit or something to that point. So infrastructure playing this additional role of coordinating private investment, getting it going. So infrastructure gap with serious consequences, I would argue. And I will stay closer to the microphone, perhaps, than I have been. Okay, third element, the productive sector, business capital, jobs, and all that. Yeah, once again, we know that Africa's problematic there. A very high proportion of employment is informal, and selling plastic toys or cigarettes or fruit on the streets. Enterprises are very small. African firms have failed to break into internationally tradable activities, garments, apparel, these things that have driven growth in Asia. And African enterprises have failed to achieve the productivity benefits I was talking about earlier from agglomeration. I've put a question mark there because I did say earlier there actually hasn't been much research on that, so that's a little bit of an assertion rather than a well-grounded fact, but I believe it to be the case. So, sorry, I think I need to be closer to the microphone. Yes. Apologies, good. I will stay closer. Okay. Turning to the third element, right, an African experience and how it matches up against the potential. The productive sector, as I just said, informal, failing to break into tradables, failing to deliver productivity. Some facts illustrating that. Again, those slides, and you probably can't see them very clearly, but let me describe them. The horizontal axis is the urbanisation rate in various countries. On the left-hand panel, non-Africa. On the right-hand panel, Africa. And the vertical is the manufacturing share of GDP. So obviously on the left-hand panel you see an array of countries that as they've urbanised, they've got manufacturing. Okay? The right-hand panel is Africa, all shifted down the lower curve, the sparser, weaker relationship. So Africa urbanising without industrialising, without getting manufacturers. So the real worry there. I want to go a little bit deeper in the last couple of minutes on the productive sector. As you dig into this, what do you find? You find a couple of quite surprising things. First, African cities have got high dollar wages. So nominal wages, dollar wages in African cities are high. Okay? So on the left-hand panel there, African cities are the red dots. The horizontal axis is income per head, GDP per capita, right? So given levels of income per head, dollar wages are really high, which is surprising. The right-hand panel is the cost of living, and again it's GDP per capita on the horizontal. So African cities, and then the cost of living on the vertical. So African cities seem to have these high nominal wages, but high cost of living. So what's going on here? What do we think is the economics driving this? Well, let me give you the analytical story very briefly. And it's really just a story of labour supply and labour demand. On the labour supply side, what I've been suggesting, talking about residential structures, talking about infrastructure, is that African cities are inefficient, right? That means if they're going to attract, the population, if they're going to hold their population from coming in from agriculture, migrating to the city, then they're high cost. They've got to offer high nominal wages to compensate, the compensating differential. So African cities, I'm saying here, have got low real wages, but they're expensive partly because they're so inefficient, creating that high cost. They're not nice places to live. You need the compensating differential, so they're offering high dollar wages, high nominal wages to compensate. That's on the labour supply side. But of course, if I'm telling a story about wages here, I better have demand as well as supply. Otherwise, it's not going to hang together very well. So how come, if these dollar wages in African cities are so high, why are firms paying them? What's going on? Well, the way to answer that, I think, is that African cities are only producing non-tradable goods. They're producing stuff for local consumption. They're doing the sort of beer, cement, maybe very light manufacturers. They're doing that stuff. So there, if you have high wages, you can pass it on to the consumers, because they're just, the captive consumers in the local market. So there's a story, a supply and demand story that hangs together here, right? But of course, the consequence is if your dollar wages are high, then you might be able to compete selling non-tradables to your local captive market, but you surely can't compete selling tradable stuff to the world. So African cities have locked themselves out of the possibility of getting into tradable goods production. Garments, electronics, all that stuff that's really supporting productivity in cities elsewhere. So the real story I want here is that this bad urban organisation on the residential side, on the infrastructure side, makes the city inefficient, makes it high cost. Sure, there are jobs. They're actually quite high wage, high nominal wage jobs. That's fine for non-tradables, but it locks you out of the real source of growth that you want, getting into the tradable sector. Okay? Modelling that. Yeah, we have modelled that. It reduces real income, that's for sure. It gives you multiple equilibria, so the possibility that you're stuck in a low-level equilibrium trap, locked in this weak position. And it's, again, strongly reinforced by expectations, right? The city is built partly on the basis of expectations about the future, so you're locked into a bad situation there. I'm looking at my watch here. The analytical story. Let me do it very briefly, right? This is just labour supply and labour demand, as I said in words a moment ago, but diagrammatically. So the labour supply curve are these upward sloping lines, right? I'll just pick one of them, the steep one. So it's city population on the horizontal axis, right? As the city gets bigger, it gets more expensive. Land prices go up. So you've got an upward sloping relationship. And you've got to pay, wages along those that upward sloping straight line to compensate for the city cost and be able to get the workers from agriculture. So that's the supply curve. I've drawn the demand curve with two bits, right? Non-tradables have got diminishing returns. That's the downward sloping bit. Diminishing returns because the more you sell to this local market, the price starts going down. So the wage you can pay goes down. But of course, if you could get into tradables, they've got increasing returns, all that agglomeration stuff that I talked about earlier. So that's why the labour demand curve has got that funny shape. Okay? So if your city's high cost, you're stuck up at EN is the way it's labelled. Okay, you've got that high cost line. Yeah? Where your city is relatively small, got high dollar wages, low real wages because it's high cost and hopeless. If you bring the costs down, maybe you can get into tradables. So that's the lower straight line. Maybe you can get into tradables. But of course, There are multiple equilibria for those of you into that sort of thing. You could be stuck down at the point labelled EL rather than making it to ET. So a real danger of getting stuck. Okay, let me summarise the African experience and then one slide on policy, and I'm done. So the story I've given you, in summary, African cities have failed to make the investments necessary for economic density because of all sorts of barriers to residential investment and construction, the land tenure stuff, the lack of capital market stuff, the bad regulations, all that stuff, right, giving low density cities. They failed to do the infrastructure, so they haven't got the connectivity. That gives you high costs of doing business. That's fine, you can pass it on to consumers of non-tradable goods, the local market, but you can't pass it on in world prices, so you lock yourself out of world markets by having the wrong sort of city structure. So you failed to create jobs, failed to raise incomes, you're caught in that low-level trap. All amplified by low incomes, you don't have the tax base. Low incomes, you probably don't have the expectations that will generate the building, so you're really locked down in that low-level equilibrium. So it's that diagram again, but reverse the arrows. Or rather, don't reverse the arrows. Change the signs on everything I said. It's all hanging together to lock you down in that bad outcome. Okay, let me wrap up just with a few policy remarks. What do you do about it? Clearly land use has to be made more efficient. Density has to be encouraged. So there are things to do with getting clarity of land tenure, appropriate regulation, probably tradability of land, markets for land, but not necessarily. I mean, you can get more efficient land use without going all the way to having free markets in it. Just removing the obstacles of building regulations and complete lack of clarity, right? Getting rid of those things will help, even without going the whole way to full marketability. So you've got to do things to improve land use. You have to do the infrastructure stuff. As I've argued, that shapes private investment in the city. And you really want to try and have infrastructure, at least some of it, is leading, not lagging. Remember the coordinating expectations argument? Just doing the infrastructure afterwards is losing a lot of the benefit and making it more expensive. You really want to try and get infrastructure leading, not lagging, which of course is easier said than done for lots of reasons. Above all, the fact that infrastructure is mightily expensive, so you do really need the public finance side sorted out. And as I suggested earlier, land value appreciation, land taxes are a very natural tax base that can be used to do that. Not straightforward. Your tax revenue comes in the future. You need the money now to build, and it's not going to be easy to borrow, or not always desirable to borrow against that future tax revenue. It's easy. It was easy in Hong Kong, where the government owned all the land and could just set it off, and somewhat similar in China. But if the city's having to borrow against future revenues, it's difficult. But still, there is a potential tax base to fund that infrastructure. And then, of course, the final thing, fundamentally important, although it's the first time I'd mentioned it, governance. Right? You have to have a city authority that is capable of doing this. And that city authority has to see the city as a whole, the bits all hanging together. Very often cities have reformed this little bit, done that bit of slum improvement. We really do argue that you have to see the city as a sort of giant factory and see it as a whole. And the city authority has to have the capability to act. And when I say capability, I mean the skills, but probably above all, the authority. African governments have tended to be distrustful of cities and people in cities, so authorities often horribly divided between I mean, what have we been talking about? The Finance Ministry, the Justice Department, the Land Ministry. There has to be an authorising environment where competent city government can get hold of this whole range of issues. And I think we are seeing that in some African cities. Certainly Kigali in Rwanda now has presidential involvement in making things work. I think Addis Ababa probably has the same. Kampala has set up the Kampala Capital City Authority, which is actually a government ministry. It sits at the cabinet table. So these changes in authority and governance are happening, and I think that's really promising. Although on the other hand, Dar es Salaam has 3 mayors for 3 different parts of the city. It's completely disjoint. Okay, let me stop there. Thank you.
Ringrazio molto il professor Venables per aver condiviso.
I'd like to thank very much Professor Venables for sharing with us the complexity of the economic mechanism that should see cities as a main theatre, and thank you also for evidencing the failure of African cities. Here at the festival, a number of meetings were held yesterday specifically devoted to migration, and I believe that we all see very clearly the relationship existing between the ill functioning of the African cities, for example, and migration. It is quite interesting to understand why this model doesn't work and what can be done to enhance the situation. I would also like to thank Professor Venables for presenting us with a lot of content in a limited time now, as is the tradition with the Trento Festival of Economics. We're going to take questions from the floor. I understand that other people are following us from other rooms, so I kindly invite the audience sitting in other halls to raise their questions all the same. Maybe they can come here just for the sake of raising questions, so as, again, to have a public debate. Having said as much, I'd like to throw the floor open. If you raise your hand, you'll be given a mic. I apologize for not introducing myself. My name is Pietro Veronese. I am a journalist. My main interest is Africa. Thank you.
La domanda che vorrei porre.
I preamble before I raise my question, if I may. Can you hear me? 1, 2, 3. 1, 2, 3. Testing, testing. 1, 2, 3. Testing, testing. 1, 2, 3. 1, 2, 3. 1, 2, 3. 1, 2, 3. Testing, testing. 1, 2, 3. 1, 2, 3. Can you hear me? 1, 2, 3. 1, 2, 3. 1, 2, 3. 1, 2, 3. Testing, testing. 1, 2, 3. Testing, testing. 1, 2, 3, testing, testing. 1, 2, 3, testing, testing. 1, 2, 3, 1, 2, 3. 1, 2, 3, testing, testing. Can you hear? We have been translating all the time. Yes, we are here.
Allora, la mia domanda.
So my question, I'd like to make a small introduction. What about the areas of growth? Do they correspond with the areas of stagnation? I'm looking at the whole of the world. The Sole 24 Ore is an Italian newspaper, and we read the paper that the USA are witnessing a reduction in the industrial production. The real estate prices are on the increase, and wages, real wages, is getting weaker and weaker in the USA. This is the same thing that we saw in Greece, Spain, and Italy as well, because we see a crisis of demand as generated by the bubble. In Japan, the crisis started in 1982 with a bubble that was never solved, and all the resources of the welfare ended up in the pockets of the real estate investors, and there's a public debt of something like 300%. So the problem is one of the urban development of town planning, but behind that there's also an economic problem. It all started with Adam Smith in Scotland. My question is as follows. Should we perhaps rethink the economy and replace the Scottish rhythm with the German Riop being the advisor to Adenauer that transformed the market economy into a social market economy in Germany, as from the 50s in Germany. That leading to the development of the development in the Netherlands, in Denmark, and in France as well, when it comes to residential buildings. So if those are the right models, combined with the right economy, a social market economy, as we may term that, and town planning, a social market economy perhaps. So we should rethink town planning with this ideal in mind for the whole world, so that town planning can be inclusive. Obviously, everybody wishes for improvement and enhancement. We see this in Germany. West Germany is producing a lot, and the wages are 15% higher than in East Germany. Eastern Germany is growing importantly, but Riop would say that the economic order cannot set in the hands of competitors. If we really want the planet to be aiming at a new stage of development and growth that are to be really sustainable, we have to rethink town planning altogether, worldwide, and specifically in American cities. That was a very long question.
Okay, I'm not sure I got the last minute or so of that, but let me try and respond to some of the points I heard you make. Yeah, I mean, clearly. Okay, sorry about that. Right, again, cities are policy intensive, right? They require active government, city government intervention to make them work. Okay, there is an American model where the large developer comes in and owns all the land and develops the private city and provides the infrastructure, but that's not the way it is even in America, right? So it is clear that cities require active and effective government. I talked about that in the context of infrastructure provision, appropriate regulation, very importantly, although not done in all cases, land taxation. As I said, there is absolutely no ethical basis for the city centre land value appreciation being taken by whoever happened to own the piece of land in the first place. I mean, the state should, in my view, tax that. So, policy-intensive intervention or government action is important. Having said that, you have to put on the other side of the equation that ultimately, obviously, a city is built, jobs created by the independent actions of millions of individuals and tens of thousands of firms, right? Government is not going to intervene directly in those. It can set the parameters, the regulations, the infrastructure, but ultimately it's those millions of independent decision takers, and they have to be taking their independent decisions in a supportive environment, but they're private decisions. And you also have to set against the need for government intervention, or the role of government, the capacity of government. I mean, I didn't talk about public housing. Public housing, yes, definitely has a role to play. I mean, the Addis Ababa scheme that I mentioned is undertaken by government. Government is building the tenement blocks, the apartment blocks, but then selling them on, right? It's building them, subsidizing the land a bit, facilitating mortgages a bit, but basically the private individuals then take the mortgages, and in practice what then happens is the private individuals sublet the apartments, so it's a very private sector activity, although initiated by government action. So what I'm trying to say here is you have to take into account the capacity of government. Addis Ababa is doing this well. Do I think that large-scale public housing schemes in Africa are likely to be successful? No, I think they're a recipe for disastrous mismanagement, potential corruption, and real mess-up. So there's I don't know if this is getting at the point you wanted about you were asking about the social market economy. But yeah, I mean, clearly an important role for government, but ultimately it's private individuals, and let's recognise government failures are likely to be very, very considerable as against private market failures. I'm sorry, I missed the last part of the question, and didn't answer the first part about the world location of activity.
Professor Venables, 2 questions. In the 3 capitals you mentioned, you didn't talk about human capital. Now, is that because the stage of these developing cities doesn't require an intensive skill base, that is, there's enough labor supply to go into the sectors you're talking about? And then the second question is an open economy question on the tradable goods sector. How do these cities move in a tradable goods world with competitors, principally China and others, who can flood their markets with very low-cost, high-production textiles? Or other manufacturing, but textiles would be the classic case where you'd expect.
On the first of those, human capital, I couldn't do everything, right? Evidently it's fundamentally important, and let me not, and institutional capital and social capital. So let me not detract from the importance of those things. Not least in government, in the ability of local government to function well. But I did not mean to I simply ignored it and shouldn't have. On the second question, tradables. I mean, the standard development model, I suppose, of the last recent decades is that you go through the stage of the development stage where development is driven by getting these footloose manufacturing activities, the garments, the textiles, apparel, whatever. And the simple-minded, optimistic application of that would be, wages in China are going up, so the stuff is going to move out to Bangladesh and one day to Africa. And I hope that will happen. But what do we have to think about? What are the worries on the way? Well, Africa has to offer the business environment to make it work, right? It doesn't. And part of that is the cities are hopeless, right? They're not the only part. Obviously, I've been talking about the urban part, and it's the argument I've been making, but it's not the only part. So hopefully that will happen, but Africa has to offer the environment. It won't happen everywhere. If Africa has half a dozen really vibrant cities working that way, that would be a very good news. At the moment, it has none. So it certainly won't happen everywhere. Third point, that does worry me a lot. Wages are going up in China, so China's introducing robots. Don't know whether you saw a couple of weeks ago the Financial Times ran a sort of week-long series on robots. So in China, it's not just the large factories doing it. Quite small factories are getting little. Don't ask about the details of robotics, but they're getting useful machines, robot-type machines to replace more expensive workers. So thinking way out, thinking some distance out into the future, into a sort of science fiction world, that really worries me. Africa will need to import stuff from outside the continent. You can't only do non-tradables. You're going to have to import something, gasoline, electronics, airplanes, whatever. But if all the tradables, and I'm moving to the science fiction world now, if all the tradable manufacturers and all that stuff are produced by robots, then Africa is not going to get it. Presumably all the income goes, or all the surplus goes to whoever owns the intellectual property in those robots. And that's might be North Italy owning a fair bit. It's certainly not Africa. So, there's that development model. I think it's important that African cities get in a position where they can get this, attract these activities. But I'm not sure, it's not with unalloyed confidence that I say that.
Se ci sono altre domande, prego.
Are there additional questions? Well, I would like to ask a question which is about the future. Vis-à-vis the very strong technology evolution, is it thinkable that... Can you hear me? Can you hear the translation? 1, 2, 3. Can you hear me? Can you hear me? 1, 2, 3. Can you hear us? 1, 2, 3, testing. Can you hear the translation? Can you hear the translation? Can you hear me? 1, 2, 3, 1, 2, 3. Can you hear me? 1, 2, 3, 1, 2, 3. Can you hear me? 1, 2, 3. Can you hear translation? Now it works. Does it work? Wonderful, wonderful. Let's go. So, I want to ask a question about the future and especially technology. So it seems that technology is not perfect yet, though. But anyway, as I was saying, my question is, vis-à-vis the current technology development, is it thinkable that cities, in a way, experience something which is the reverse? Because if you can connect, remaining far away from the center where population is concentrated, is it possible, at least in advanced areas, to think that cities get less concentrated? So, again, I'm sorry, that was not possibly the right question about technology, because technology is failing us in this moment.
Okay, technology was working, so thank you. Thank you for the question and the interpretation. That's great. Yes, it's possible. I mean, I ask myself this one quite often, but I don't think so. What do we know? Cities offer amenities and social contact as well as business contact. Okay, so I think there are lots of reasons for living in cities. We're not all going to want to retire to the countryside immediately. Face-to-face interaction remains important, I think. I'm doing this here rather than by video. That obviously could change. Maybe video conferencing, there'll just be a hologram of me here, and so that could work. What are the other bits of evidence? We know that over the last, if you go back 20 years, people were predicting the death of cities, right? You know, London was depopulating, American secondary cities were in New York, were in decline. So, yeah, at least in these sort of first stages of the ICT revolution, the trend has been exactly the opposite, okay? So, such evidence as we have is cutting the other way. Third, or am I on fourth now? There's kind of income and substitution effects here, if you like. Yeah, it's easier to communicate with a co-author electronically than it was. So I communicate with co-authors electronically, but more of my co-authors are scattered around the world, right? You need the face. So that means that the total amount of face-to-face time that I spend with people who live in other countries has probably increased as a consequence of better technology, right? So, you know, I've got more international collaborators. A lot of the collaboration is electronic, but you do see them face-to-face every so often. So that's sort of pulled the other way. So I guess, you know, when people ask me this, I always end up saying, yeah, when the telephone came along, its first use was to arrange face-to-face meetings, okay? Now, as emails come along, we no longer just pick up the phone to people. We use email to arrange a phone call, to arrange the face-to-face meeting. Yeah, so it kind of hasn't unraveled completely yet. But it's, you know, who knows? Can't see the future.
I think that our time is up. Are there additional questions? There aren't, so we thank you all for being here, and we thank our esteemed speaker. Thank you very much.